Indian markets this week are buoyed by renewed optimism surrounding India-US trade talks. Now, this has led to a multi-day rally. The upward momentum followed a period of uncertainty that saw the nifty drop after the US imposed a 50% tariff on Indian goods. However, the Indian rupee continued to weaken against the US dollar. The rupee reached the 88.4 mark this week. The currency slide is largely attributed to a combination of factors, including a strong US dollar, concerns over the trade talks, and foreign institutional investors pulling out of the Indian market. The recent US tariff hikes have been a key driver of this depreciation, as they reduced forex inflows and increased demand for the dollar from importers. Now, the softening of rhetoric from both US President Donald Trump and Indian Prime Minister Narendra Modi has brought a sense of relief to the markets. Both leaders have expressed confidence in a successful completion to the negotiations. Well, this positive sentiment has helped lift the stock market, even as the rupee struggles, while India's strong macroeconomic fundamentals, including record foreign exchange reserves and a narrowing current account deficit, provide a buffer. The rupee's trajectory remains vulnerable to the outcome of these crucial trade discussions. Analysts suggest that a concrete trade deal could help stabilize the currency. But until then, a depreciating bias is likely to persist. And for more on this, we are now being joined by Mithali Nakure, who is an economist and founder of Nakure Associates. She's joining us from New Delhi. Thank you so much, Mithali, for joining us on the broadcast.
Thank you. Thank you for having me.
Mithali, what do you think is driving the rally we're seeing in the Indian markets right now?
So I think that, there is a huge connect between the rally that we're seeing in the Indian markets in the last 2 days and the developments that have been taking place in the US and India dialogue. And this is reflecting almost one for one in, in the developments on the markets, because at the end of the day, the markets are now starting to factor in that the India and US relationship might be moving in a more positive direction. There's been a rapprochement between President Trump and Prime Minister Modi. And at the end of the day, the markets are sort of looking at these as positive cues for, a future where the two countries can start talking and start working towards a trade deal. That hugely, buoys up the chances of growth in the Indian economy.
Right, Mithali, and the rupee has been under some pressure lately. Now, do you expect that trend to continue in the near term?
So at the end of the day, the reason for the pressure on the rupee was the fact that foreign portfolio investors were a bit spooked by the conversations and relationships that were unfolding and the geopolitical dynamics that were unfolding. And as a result, there was a sort of movement out of, the Indian market. Nearly $2.4 billion worth of FPI portfolio holdings were taken out of the Indian market in the last 2 to 3 months. However, what the foreign portfolio investors have realized is that the Indian economy has posted a growth of 7.8% per annum, in the last quarter, and it's projected that even in the next FY, India will have a very strong growth between 6 to 7%, regardless of what is happening, with the trade deal. And the downside impact of the tariffs is being estimated to be anywhere between 0.4 to 0.6% of GDP, which is far lower than what was expected. I've been here on the ground in, in states like Uttar Pradesh, where there's been a huge impact on some of the traditional industries of the tariffs, but we're not seeing that impact seep through into the high technology sectors because alternative markets are being found. So therefore, at this point, for foreign investors, the Indian market still holds good in terms of the kind of returns that it can provide. And it's also a very stable market, unlike a lot of other emerging economies at this moment.
Right, Mithali, and having said that, if India and the US do manage to strike a favorable trade deal, how much of a boost do you think that could give the Indian markets?
So I think, one of the conversations that was going on in the last week was really around the Indian IT sector and whether that would be sort of brought into, this entire conversation, the Hire Act, being spoken about. But I think a lot of US firms have realized that the Hire Act is actually detrimental to the US economy and to US growth. And therefore, they have also been lobbying against that act. Plus, when you add to the fact that President Trump and Prime Minister Modi have now already started discussing the terms and moving towards a trade deal, which was originally actually discussed in February, we could look at an Indo-US trade relationship with the potential of nearly $500 billion annually, and that was the sort of aim that was elucidated in February 2025. And if we are moving towards that sort of a goalpost, it could actually boost both economies in the range of 0.5 to 1% of growth for the Indian economy, particularly. So, in such a situation, it definitely becomes reason to cheer for a lot of the markets.
Absolutely. Thank you so much, Mithali, for joining us on the broadcast and sharing a valuable perspective with us.